Alright, you're welcome back into the channel. In today's video, I'll be walking you through on how to do your confirmation entry. In fact, in our previous video, we have a whole lot of comments from the comment section requesting for confirmation entry. In fact, this is a huge request from our Telegram channel, from our TikTok, and from our YouTube. So we have taken it upon ourselves to make a detailed video on confirmation entry. In fact, this class is a confirmation entry masterclass. So if you don't want to miss out on any detailed step-by-step guide on how to go about this, make sure you watch from the beginning to the very end of the video, as you'll be getting everything which you need to understand how to go about confirmation entry.
All right, in this particular session, we are going to be discussing and talking more on what confirmation entry, how to do your confirmation entry. So in our previous classes, we already learned how to build our bias, or the necessary procedures you have to follow, and everything we have said so far. Please, you need to hold everything in your head so that you don't end up doing the wrong thing. So yeah, in this particular section, one thing I would love to call your attention to, one, you need to understand what's liquidity, which you have already done. You need to also understand what we call range, and you need to understand CRT very well. When you're able to understand CRT very well, you need to understand MSNR key levels, right? Understand MSNR key level. And also you need to be able to tell the direction of the market. Now with all this, if you understand all this, then I believe going about entering a trade or forming a valid bias for you to risk on, it will be an easy thing for you to do. So without further ado, let's quickly proceed, because I don't want this to take much of our time. Let's just go straight to the main points. So from what I've shared with us before, we talked about our processes that we should follow. I've already shared this with you in the community. You understand CRT, everything here. So let's go about our checklist, our roadmap on how or what we should be doing. Now, the first thing we talked about on our roadmap is what? First, we want to know the trend or direction of the market from higher time frame. Be able to tell previous closest price action, identify where market reacted on before, and the rest. You can go over and read this, so I don't want this particular session to take much of our time. So now the first example we'll be working with is let's check Euro AUD. Let's check for Euro AUD. Right, let me wipe my charts and clear everything off from my screen. Euro AUD, I think there's an example I have a trade I took around July. Let's see, yeah, July 10th. Okay, let's see, that's July 10th. All right, I should be around here. Good. So let's see what we have here. So please make sure you pay attention, and after watching this video, if you feel you have any question that you want to ask concerning anything in this particular video, just do it to ask. So let's quickly proceed trying to set this. Okay, so now there's an example we had here, and this is the example, right? You can see we have a CRT here. Sorry, let me reduce this color. Right, we have an example around here. I believe you can see it clearly. See, right? Now we see something that the first thing we want to be able to do when we come to our chart is what? Should be able to identify the trend. I'm going to take time in this particular example because it's the first one, but the rest I won't be able to take time like this. We want to identify if the market is bullish or what? Market is bearish. And currently we're on our daily time frame. Now let's say we come across this market around this guy here, this leg here, right? You see what happening here? Market has been what? Bullish. This trend is really obvious. You see, right? Market has been bullish, then we came to this side. Then now I say something about range, right? Now you can see that we had a break of structure here to the upside, and also market keep breaking structure to the upside. We had another break of structure here to the upside. See how markets keep breaking structure. We have another break of structure here to the upside. So currently, you agree with me that from what we are having here currently, if you want to mark your range now, this is your low, this is the last low the market created, and also this is the high before market started reversing to here to the downside, right? So now this is the thing you want to do here. You want to be able to pick or mark your daily range to know where you want to focus on taking trades from. And I say you can use your gambles or your FIB tool, or just use any tool that can indicate 50% of the range for you. So currently this is our premium. We are not interested in doing what? In taking any buy from here, and this is our discount. We are interested in taking buys here, and we are not interested in taking any sell here. So currently this market is bullish. So our focus on this particular market should be what? Should be looking for buys, right? Yes, should be looking for buys because markets continue going to the upside. So in this case, I'm going to delete this out. So we already know our premium and our discounts, right? Let me just highlight this before I delete it. Yeah. So these are our premium and these are our discount leg, right? So let me delete all this so our charts don't look messy. Yeah, I'm just trying to explain this better in an easy way, but in the next example, I'm going to take much time. So you see, these are buy zone and these are our sell zone, right? So let me delete this. So these are premium and our discount. So let's say we met this price around here, right? Now, don't forget, we also combine CRT using using what we call, using what we call key levels, right? So I say something that when I say something in our classes, in our previous classes, that you can take a trade from, you want to focus seeing your CRT forming for you that's in around a key level, in the sense that the second candle will touch a key level. And don't forget, the first candle in a CRT, this creates the range. The first candle creates the range high and range low. Second candle does what? It sweeps the candle and tap into a key level. Then the third candle creates the entry. When we talk about the third candle creates the entry, this is what we simply mean. This candle will form the entry where you should enter from and also form the target, right? So now, this is it. This is an example. You can see that on this CRT, the second candle has to touch a key level. It's very important, right? Even the buy, the second candle has to touch a key level. And you can see couples of example with key levels, right? This is A-shaped key level. You see, this is a CRT formed, and second candle touches a key level. After sweeping the first candle that created the range, it touches a key level. These are a very, very important criteria you need to focus on. You see this type of key level. I think we have already talked about all this in our previous classes. So if you must have attended the classes or watched the previous video, you'll be able to understand this which I'm saying or I'm talking about right now. So now, let's go back to the example which we're trying to make use of. So if you come to your chart and you see a CRT form, you want to be sure that if that CRT is in alignment with the trend one, and you want to be sure if that CRT second candle touches a key level. If that CRT second candle doesn't touch a key level, please ignore it, because at the end of the day, you will end up having some losses in the market, right? So now, this is the first thing we want to do. Come on our chart, and we saw this CRT forming for us. So let me just use my replay tool in this scenario so we can do something very fast here. Right? So we come over to our charts. This is what we're seeing. Already we know that this is our discount leg and this is our premium leg. We are already aware of it. And you see that this market is very, very bullish. So all our focus is that we want to start look for any areas of buy around here. Even mind you, before this CRT candle forms for you, you must have been eyeing or looking at this key level here, because this is a key level that can sponsor price to the upside. So you saw what happened right now. You see that we have the first candle we serve as range, which is this, right? And we have the second, we had the first candle giving us the CRT range low and giving us the CRT range high, right? So all our focus in this scenario is that we want to, once the CRT candle high is being taken out, the low is being taken out, we are expecting the high to serve as our what? Take profit. And you see that this first candle created the range, as we like we said in our checklist, and we expect this second candle to do what? To sweep the candle that creates the range and tap into a valid key level, just as this, you see. So when you come to your chart and you see something like this, it simply means that this particular market is really forming something very, very valid for you, right? Forming something very, very valid and very, very vital for you. So all you want to do now, you may decide to use 3 time frame alignment, 2 time frame alignment, or whatever, any one of your choice, right? So let's see when it comes to time frame alignment. Let's see what I said on time frame alignment. So these are the time frame alignment I talked about, and you can make use of any one. Talk about weekly, reject weekly. Okay, let's leave this. This is one I love using. This daily key level to 1 hour entry, or daily key level. You want to see your breakout on H2 or H4, and 1 hour or 15 minutes or 30 minutes as your entry, right? So this is what you want to see on your chart. So let's go to our chart and see which examples or which time frame alignment you can use on this. So now we already had this, and there is one rule you need to pay attention to. When a CRT candle is being formed or is forming like this for you, you need to wait for the second candle that swept the range and the key level to close first. I've said this multiple times, so this is not a new thing. So if this second candle do not close, don't go to your lower time frame to look for entry or to look for breakout yet. You get. So now this is what we want to do. Let's say we want to use 3 time frame alignment, which is daily CRT. Then we want to go to H1, H4, or we want to go towards H2 for breakout, then what's H1 for our entry. Maybe this, or maybe we want to use daily CRT. Then we want to go towards to our H1 to look for our breakout, and still on that H1, when we see our breakout, we want to see liquidity, then we can take our entry from still that H1. Yeah. So now we are going to be using this tool in some scenario. Like this is what I want to call your attention to. You don't necessarily depend on this particular first one here, because in some situations, some market condition, if you are waiting for daily CRT, H4, H2 breakout, you end up missing entry on the 1 hour time frame here. So what you need to do, you need to be very smart and be logical, understand what market is presenting that aligns your strategy. Now, this is now what I advise you to do. When you come to your chart, once you see this second candle closure, you go to your H1, look for your breakouts. If you see a valid liquidity and a valid key level, then I think there's no point you stressing yourself using a 3 time frame alignment. So when we have this now, mind you, this second candle has closed, so we want to go to our 1 hour time frame, right? On this 1 hour time frame, let me take this out. On this 1 hour time frame, what is our focus? Our focus is that I want to see a change of character, see something as break of structure. Now, 1 hour time frame, let's say we had market, because now it's for a buy. We had market giving us something like this because market has rejected off it. Now I want to see market coming to give us a liquidity, then tapping into the 1 hour key level and start buying to the upside. So this is just a framework of what we are doing on this particular 1 hour time frame. You don't need to confuse yourself. Everything is very, very simple and very easy. So now you can see this on a 1 hour time frame. What do you want to do here, right? That is a question you want to ask yourself. First, you want to look for a breakout, right? And now, believe me or not, we have already gotten our breakout from this leg here, right? I've already gotten your breakout. Now, what do you want to do next? You want to look for area of liquidity. You agree with me that this guy here can serve as our liquidity, right? Because I say something, if you watch the liquidity video, we talked about liquidity can be formed in different ways. It can be that liquidity can be the first pullback after a value break of structure this way. Then we expect market to come back and use the key level to trade to the upside, right? Yeah. So something like this, the first pullback after a value break of structure. This is a value break of structure. So this is a pictorial of what we should be looking for on our chart, or the framework of our entry is what. Let's say this guy can serve as a sweep. Maybe you can sit on the 1 hour time frame or the daily time frame as well. Then we want to see a break, a liquidity, then entry, right? So now this is what we have. This is our breakout to the upside, which caused a change of character to the upside. Then this is the first pullback here, and which serves as our liquidity. Then we can find our entry from any key level we are seeing here. So you agree with me that the key level we are seeing on this 1 hour time frame now is this key level here, right? Now this is the key level we are seeing. So this key level will serve as our entry leg, and also you can see that we are having a sweep here. You see, we're having a sweep here. This sweep is not really necessary, guy. What is the major thing you should focus on is the breakouts, liquidity, and a valid key level that is very close to your stuff, right? So now, this is something I really want to call your attention to here. Now you can see on this particular example, now we are not having multiple key levels like the QM, the Apex, the OC level, and the rest. In some market conditions, that's why I always advise that don't cram this strategy. Learn the pattern and go over to your chart, practice, and be able to identify them when you see them on your chart, and be able to know the particular or the best way to approach them, right? In some situation, you see that market will create a whole lot of key level for you, in the sense that you'll be confused on which to use. You might have the apex level. This one will be the apex level, that is the V-shaped key level. Then you can also have this, which is the QM key level, and you may be seeing an OC key level around here. So when you see something like this, you should know how to apply or to know how to do them. I already talked about it in our previous classes. So now, when you have something like this, don't need to stress yourself. Just pick your position too, right? Because everything is in alignment with the trend. When you pick your position to, what you want to do here now is to put, this is the place, area of invalidation, which your SL needs to be, right? So you just give it a little pips away from it, something like this, right? Then our target, don't forget, our target is the CRT high, right? Or you can target 50% of the CRT, right? So these are target. This is a 14.6. Maybe you can just target, if you wish, you can target the 50% of the range, which is this. 50% of the range can be used as this. Sometimes markets will not just go straight to this CRT, especially when the CRT is as far as this, right? That's why me personally, I don't really love doing huge RR. I'd lost my fixed RR, not like a fixed RR. My minimum fixed RR is 5 RR. Then 7 RR can consider 7 RR. So in this scenario, let's just work with our minimum 5 RR. This strategy must give you above 5 RR. Yeah, so it's a highly stuff. Yeah, it must give 5 RR. So imagine in a particular trade and you're hitting 5 RR, I think is a good thing for you. So you can target the rule stated that the CRT high or CRT low serve as our what? As our take profit, because in a CRT, the high or the low serve as a liquidity point, and what do market do in the market, or what does price do? Price hunts for what? Liquidity, moving from a particular liquidity to another particular liquidity. That's how market moves. That's what drives market, right? So now we can equally target, like I said, we can equally target this guy here, or we can equally target our normal 6 or 5 RR, or you can target what? The 50% of the range. So in this scenario, okay, let's just forget about the targets. Now I've told you which area or which place you can target, and you can also target liquidity area. Maybe there's a valid liquidity area around there. You can just target to use it, or target a opposing key level, because that opposing key level can serve as an obstacle which can drive price backwards. So buyers may want to react off it. So you just need to put your SN in an area where you are sure that market will definitely come to that side. Okay, so liquidity is one, FVG is one, what again, key level is another. Then the candle range, high or low, can be as a liquidity. So let's not take much time. Let's play this, then we see how it goes. I believe this was able to hit CRT high. So let's see how it goes. I think I'm going to increase this, right? Okay, let's just leave it and see how it plays out. So let's see. So let's wait to see how it goes. All right. Okay. I think I'm going to fast forward this so it should be more faster than this. Let's see. Okay, so we have already hit, that's already hit our take profit, right? And you can see that this is more like what, a miss entry. You can see it's more like a miss entry. I'm aware of this. I intentionally chose to start with this because now this thing here, this strategy is not like something that is a holy grail that you always be eating take profits, or you know, encounter miss entry, or you know, encounter losses. All these things are things that will surely occur. It's something that will surely happen. You get? So now imagine a first example I'm sharing with you, something that is a miss entry, right? So let's move to another example. So everything I've said so far on this, pay attention to them because they will really help you. You don't need to bend the strategy. You don't need to bend. Implement everything that is being said, every procedures, every step-by-step guide. These are things I've done in the past that have worked for me. So you just need to pay attention and make sure you put everything into place so you can get the best of it, right? So let's move to the next example, which I'll be sharing with you right now. All right, this is an AUD card pair. So now this is all you need to do first. Like I said, you want to identify the trend. So if you watch market from this side, you notice the market has been bullish, moving to the upside. You got to this side. What happened next? Market started going to the downside. Came down here, went up and came down here. This was the last breakout structure we had, which confirmed to us that what we are now bearish, right? After it came to this side, it went up, giving us this high here, and this is the key level it reacted from. Like I said, you need to be able to tell what the previous market has done before you start looking for the present. Then you target for the future, right? So currently, this is where market reacted from, traded to the upside. It's yet to take this low. So officially, we should be aware that market is coming to take something from the down here. So let me just take this out. Let me just take this out, right? Let me take this out. So when you come to your charts, this is what you're having. You're having this, right? Now we are bearish, as I said. Takes out this low, market is reacting from this key level, right? Then we're expecting what market should come down again. Market traded to this downside, we trace to this upside here. So now you want to ask yourself, when you come to your chart, something like this, officially we are bearish. We're expecting market to take out this low first. This is the first low we're expecting market to take out. After market taking out that low, then we expect market to take this overall low. Yes, or maybe something else, right? So now this is something I really want you to pay attention to. Now you can see that this is a CRT candle. This is a CRT candle forming one, and you want to check where, okay, CRT candle low. Then you want to check where this second candle reacted from, or is reacted, or a key level it has tapped to. This is a key level here that this second candle has tapped to. You see how very simple all these are, right? Very, very simple. So you see the way I'm taking my time, I'm not rushing it, so you get a perfect and a better understanding. Now the next thing you want to do, you want to switch to a lower time frame, which is a 1 hour time frame. That 1 hour time frame, you want to see your confirmation entry there. Now on this 1 hour time frame, our focus is I want to see a liquidity. Market should create a liquidity for us. Then we use the key level which we are seeing. So currently on this 1 hour time frame, this is our breakouts. We have our breakouts here, right? This is where we had our breakout. So this officially confirmed to us that we are bullish. And don't forget, this is our CRT low, which will be our target, CRT low, which will serve as our what? Our target, right? So let me shift this out from here, then delete this guy. Right, so now after this, now what do you want to see? Liquidity. Now don't forget, we are having this apex key level, right? Having this apex key level, we are also having this key level which markets can still use, and also we are having this key level which can serve as what? This key level here, which is also like a support broken turning to a resistance. So in all this, we don't have any business in doing anything here. our focus should be what? Where market creates a liquidity for us, right? This liquidity can be session liquidity, maybe Asian liquidity. It can be normal liquidity, which we already talked about, right? So now you have all this. You don't need to worry yourself to be confused on which key level to use. You just want to see markets creating a liquidity for you. So let me play the two. Then we'll see what we can have here. Let's play the two and see. So market started going to the upside, going to the upside. Okay, now this is the liquidity. Oh no, this is too fast. Let me take this back. So now you can see that this is the liquidity that market created for us, right? Now you want to validate this. Let's go to the 30-minute time frame and validate it. You know, I talked something about liquidity that you need to wait for your liquidity to form very well for you. So this is a valid liquidity from our end. Now you are confused. This liquidity is very close to this key level, so this is very close to this key level, right? Now this is the thing you want to do here. For me, in this particular market, I used the apex key level because this is the valid key level I'm expecting market to make use of. But in this scenario, maybe if you are confused, this is what you just need to do, because you are scared of getting a missed entry. You want to use from here, right? You want to put your position to from this guy here. You want to put your position to from this guy here, right? And also cover this particular key level. So this is the intended place you want to put your what? You want to put your SL, because that is an area of invalidation, right? Then you target the CRT low. So on this will give us 4.5. So let's just make, because this is the high invalidation area. So you just need to give it a few pips. So you can either use 6RR. Okay, SR is okay here. I don't see market disrespecting this key level. Now, this situation whereby you are not really sure if this key level will be used or this key level will be used. But if you are so sure, you don't want to gamble or want to take this type of entry, you can just focus on the apex key level, right? So in this scenario, let's focus on the apex key level because I'm expecting market to use the apex key level. So this is how you refine everything. Let's just refine it to be 8RR, okay? Let's just leave it at this, right? So it doesn't take much of our time in this particular teaching. So you can see that this is CRT low and this is our target. So let me just play it through so we can see how this particular trade played out. Now let's see. See, we got tapped. Market started moving. You can still look for re-entries, but actually there's no need in that. Just allow market to do its thing. So you see, right, market has hit our key level. Now this is something that you need to pay attention to. You don't need to be greedy in this strategy. Focus on liquidity, and this is a perfect liquidity. I can see that how markets tap into the swept the liquidity instead of doing what's going to the upside. Like I say always, market target for what? Liquidity area. Take liquidity, move, sweep liquidity and move. You see what happened here? It swept this liquidity because you may want to be greedy and say you want to extend it. No, it's not right that way. Now, the purpose of this CRT is that CRT help you to tell the direction of the market. It also tells you the exact place you should use as your exit points, as your take profits. These are very, very important. So let's move forward. This is one of example which you have already done, and maybe you want to do a recap of everything. Just take the video back. So let's say maybe you want to use this particular key level here. You are still good, just that your R will be reduced. Put your SL and this high, this key level here. Put your SR key level. This may give you 5RR. So you see, it's still okay this way, right? Very, very, very okay. You have no issues with this. So it's because in some situation, market will just use that key level which I've shown you, right? Market will just use this key level. So these are necessary things you need to pay attention to so that you'll be able to make a lot of money off the strategy. Like me personally, I always target 5RR, 7RR as my minimum, right? So let's move to the next example, which I'll be sharing with you. I'll be sharing like 6 or 5 examples for you. Maybe I'll make this video in 2 sessions, right? Yeah, so let's do another example. Take a look on this GBPAUD card example. I didn't actually take this trade. but due to my time of studying, I was able to see this particular trade, right? So let's use it as an example here. So if you watch closely, you see the market has been bearish, right? Market has been bearish, going to the downside. See the market has been behaving, coming to the downside here. So now, if you watch something here, possible key levels, you can MSNR key level you are seeing here is this particular key level here. Sorry, we have this particular key level, which I believe a lot of persons will be expecting for price to use, right? And if you watch closely, we also have this OC key level here, right? Let's say market hasn't formed all this candle. We'll be looking at this OC key level. And what happened at the OC key level? CRT formed there. So let me increase this chart. Sorry, let me increase this chart so I can make use of it. So you see what happened here, right? Market formed a CRT candle. So I'm going to take out this particular candle here, this particular one, for this is an entry candle. Like I said in my previous statement, that the first candle creates the range. This first candle creates the range. Then what? Sorry, I didn't draw that thing well. Let me increase this. I'm not really seeing it well. The first candle creates the range high, range low, and the high has been swept, right? Then what we expect this second candle to tap into a key level. See the key level we tap to. Like, this strategy is just something very easy and very straightforward. Just that you need to have patience. In a week, you can see set up like 2 or 3. Depends. Sometimes you may just see one, but the reward, imagine a week you are going out of a particular week with 5 hour, 10 hour, 9 hour, 8 hour. It's okay for you to pass your profit, right? So these are the things. You don't need to be trading always and every day. Yeah, some will have this CRT. I will take out this particular candle because this is an entry candle. So this is what I will just do here. Let me take out the candle. Then we can focus on getting something. So when we have something like this, this is something I always see that this is a valid CRT for me, a valid bias for me. You can target this low here, right? Or you can target this guy here because this is a liquidity and the market is bearish. But I don't usually request or advise this. Just focus on let your target be so realistic. You get target should be very, very realistic. When you get something like this, you want to wait for this candle closure, right? So this candle already closed. Let's go to the 1 hour time frame for our entry confirmation, right? So on our 1 hour time frame, here on our 1 hour time frame, right? On our 1 hour time frame. So on this 1 hour time frame, let's see if we have gotten a breakout, right? This is the key level that got rejected, the market's rejected from, right? So you have this QM level, right? We have this QM level. Like I said, the first example I gave you, where we have I told you that there are situations that you may have multiple key levels, like this key level here, which is QM, and also this key level here. So you need to pay attention to all this. You don't need to be ignorant to all this, right? So now in this particular one, you see that we have this particular key level here, this particular key level here, and we also have this apex key level, which is serving as what? Which is serving as A-shaped key level, right? And we also have this OC key level overlapping. This OC key level that is overlapping here, you see it. So all these key levels are very important, right? They are very important. But let's see where we got our breakout from. This is where we got our breakouts. Our breakout is here. If you want to confirm this, you can use your line charts. You see, this is where we got a rejection. Market came down, giving us a breakout here, and this is a false pullback, which can serve as our liquidity or inducement. So we just mark this place as our liquidity. So currently now you may be confused, which key level am I going to use? Focus on the key level that is closer to the liquidity. Now we still have this OC key level, but I won't advise you to use this OC key level. So we are not going to use this apex key level, but we'll make sure that our SS should cover this apex key level, so that in case market wants to manipulate to this side, it won't affect us, right? Or still you can choose to use this overlapping OC key level. I think let's work with this overlapping OC key level, because now we are having apex key level, overlapping key level here, and QM key level here. But in the right sense, I would advise you to just use this guy here, because this guy seems more valid to me. The market is going to use it. Now, if you want to get something very, very, very right again, very important now, just mark every key level you are seeing here. Now align it with other time frame. If you go to another time frame, if those key level are still key level on that time frame, it tends to show you that key level is very strong. Now let's go to the 30 minutes time frame and see how any of this key level looks like. So if you watch closely now, this OC key level still remain OC key level in 30 minutes time frame, and this guy is still a valid key level, yeah, and QM still remain QM. So let's check 2 hours. These are the things I normally do sometimes if I encounter all this. So if you watch closely, I love what 2 hours is showing me. These 2 hours now, I can see that this guy now is A-shaped key level. This overlapping OC key level is what? A-shaped key level. So let's see what 4 hours is showing us. 4 hours will tell us a lot of story. In fact, you can see on these 4 hours is still maintaining this OC level, overlapping OC key level, right? It's still maintaining it very, very perfectly. You see, so in fact, I don't need to stress myself much. I will work with the overlapping OC key level and ignore any other key level I'm seeing here. So going back to your 1 hour time frame, this is what you want to do now. This is what you want to do. We are going to use the overlapping OC key level, right? So we pick our position 2. Where is it? You place it. Just place it. Once you place it, you want to set your SA. Your SA can be above this particular week or above here. For me personally, right, I don't normally, I love trading with peace and putting my SA in an invalidation area, in the sense that I don't really target bigger RR, right? I just focus on getting what I need to get from the market and leave the market, right? So this is our CRT, no CRT. You see, so let's take it to a CRT. So taking it to a CRT, we'll get what we call 4.8 RR. Let me just adjust this, right? Just make it 5 RR. I don't want us to target this low. So okay, this is what you just need to do. Since you are getting 4.8 RR, you can just make this to be 5 RR. Yeah. So this is what we'll do here. Sorry, targets, just fast. Let's leave it here like this. So 5 points, right? So let me play the 2. I think this is taking much time. Let's play the 2 and see how market reacted off it, or how it plays out. You can learn something off it. So you see, it was a sniper entry. Actually, it was a sniper entry. See, right? Very good sniper entry. Right, so let's see if market takes out this CRT. Let's see. These are the crazy price action you may experience. Markets very close to your key level, your target points, and start behaving this way. So by now, I believe you must have set your BE, right? Because markets coming down to this side. This is 5 RR already, but this is the CRT low. I see the market didn't come to take out the CRT and reverse back. So I believe by now you must have set your BE, and definitely you'll be out of this particular trade with BE. Maybe let's say B of 2 RR, because this guy ride to 4.9. In fact, almost 5 RR. So me personally, I'd always do 5 RR. So maybe someone will always do 5 RR or targeting for RR or whatever. This trade will hit your TP. But for me personally, this particular trade, I would have leave this particular trade using using BE. So let's check for more examples, then we can see how we go about. Let's quickly go through this particular example, right? So you can see let me use my replay tool first. Let me take out. Okay, so this is the place I want to talk about. This is the CRT we had here, which I want to talk about. Okay, I think I've already made this example before in our previous classes, if you guys pay attention very well. So I'm bringing it in here because it's a perfect example, which I want to keep this particular recording for you guys. So you see that market is what? Bearish, breaking structure to the downside, right? And what happened? Broke structure again to the downside here. Our expectation is that market should continue doing what? Breaking structure to the downside. That's our expectation. So now, here's a place we got our entry from. Let me increase it so you see. I think before I use my replay tool, let's wait first. So we got this breakout structure to the downside, which indicates to us that market is still what? Bearish. Then we also had this low here. Now with this low, in future, our focus should be that market should take out this low. But since we are trading CRT, we target the CRT low, or we target any possible closest key liquidity area, key level, or FVG again. So now when we have something like this, this is the CRT. Let me increase this so you see very, very well. Right, so this is our CRT range high. See, right? Our CRT range high. And also, this is our CRT range low. Now, mind you, I always say something that there are some situations that the CRT range high and low, the CRT candle that forms the range may not be as big. It may not be as big. So when it's not big as that, it may not be able to give you the wishes to reward. You can either ignore it or look for any area of liquidity. You can see this guy can serve as liquidity points. This guy can serve as a target point. It can be used. This guy here. This guy can be used. I believe you understand what I'm trying to say here. It's not because this market has already played out, but this is how it is. And it can also target FVG. I believe if we go to a lower time frame, this SVG here will be more, will look very, very better. Now you may be wondering, where did this guy tap into? The key level he tapped into is this particular key level here. This particular key level we are seeing at the top here. This is the key level it's used. This is very, very close to it, right? So this is the key level it's used. So I'm going to take out this particular candle now. Then we'll see how to go about it. Yeah. So now this particular one now, we are going to be using daily and daily. We'll use daily CRT, 2 hours breakouts, and 1 hour for entry. Guys, we are using what? 3 time frame alignments. It can be daily H for 1 hour for entry, or daily H for 15 minutes as entry, or daily to H1 as entry. So in any one, just make sure you apply you apply the entry based on what market is presenting to you. Again, as I always say, learn the logic and don't cram it. So I'm going to take out this particular candle, this entry candle now. Let me take it out. Then we can do something from there. So when we had our stuff like this, market has wait for this candle closure, right? Go to your 2 hours to look for your breakout. In the 2 hours, let's see if we can get our breakout. Now, for you not to be confused, you can equally use what? You can equally use our CRT low. Let me label it CRT. For you not to be confused, you can equally use your line chart to know where your breakout is. So using our line chart, you can see that these are our breakout here. We got our breakout here. Right? So these are what our breakout. So having your breakout here, what do you want to do? You want to wait for a liquidity on the 1 hour time frame and a fire on, right? So now on this one, we are currently on our 1 hour time frame. Let me move this out from here. So on our 1 hour time frame, we want to do what? Look for our entry, then we can ride it to the intended direction, right? So after our breakouts, right? After our breakouts, you can see this is the first pullback that market gave us, which can serve as our what's liquidity, right? Then the possible key level we are seeing here should be this key level, because this is the possible key level we are seeing here. You see how simple it is. Just follow the procedures. See that I'm taking my time, I'm not rushing it, so that you can get a better and a perfect example. And one thing you need to understand is that you don't just get this thing once. You can rewatch the video, practice, rewatch, practice. And I will advise you go over to your chart and check all these things together. So now when you have something like this now, what do you want to do next? You want to pick your position 2 and fix it. Right? In fact, this particular example is so obvious. Very, very obvious. So you target CRT low. This is 10 RR, 10 RR, 10 RR, yeah. So this 10 RR, I think earlier I missed this particular entry because I was focusing on a rejection method, which I missed the entry. So when this guy presented himself, I didn't bother to take it. Right? So let's quickly proceed. Let me play it. So like I said, you can target this guy or target this guy, but there's no point. This 10 RR is enough. 10 RR is enough for you. So I don't see reason why I should extend it. Trying to look for 100 RR. There's no point doing that. So let's see how this market reacted off this guy. Let's see. So see the reaction, right? See the reaction. Let's see if we're able to hit take profits. Okay. So we hit take profits. Actually, this is an area of re-entry, but we're not going to do or talking about re-entry. This is an area of re-entry for us. We want to enter again. Then this guy can serve as our liquidity because it's the first pullback here, right? So maybe you want to do re-entry, you would have re-entered from there. So this is an example on BTC. So just take note of everything, journal everything, and write them out. So I think I'll be giving you 2 more examples or just one. Then we can call it a day. So let's see. Okay. I'll end this particular session here. Then I'll do more example like 3 or more or 2. Then that's all for confirmation entry. You apply them, you study them, go back to your chart and practice them, and you see how effective they are. You get my point? So let's end this particular session.